They're little change at the moment. Stocks have found their way higher. And we had this jobs report that showed that job openings are alive and well. In fact, job openings jumped to an almost 2-year high. What does that mean for monetary policy? What does that mean when you balance it against the inflation picture? Let's bring in Shana Sissel. She is founder and CEO at Banrion Capital Management. She joins us now from Chicago. So, Shana, I feel like there's a lot here that sets us up for the big jobs report on Friday at the end of this week. How are you thinking about how investors and markets are positioning themselves for the jobs report?
I don't know that they're necessarily positioning themselves for the jobs report as much as they're positioning themselves for Fed policy that is caused by the jobs report. So I think when we got the new Fed chair, there was a belief that he would be more likely than not to cut rates. I think with the higher inflation numbers and a strong job report, especially as it pertains to job openings, that is less likely to happen. I don't foresee that happening at all this year, but I think the market is kind of positioned for more relaxed monetary policy, more market-friendly monetary policy, and the jobs report is just part of that story.
This is a market that's setting, as we listen to John Tucker every day talk about new all-time highs. Is there anything to break this market? It seems like, and we've now got some mega equity offerings coming if you didn't have enough to deal with. What do you make of just the tenor of this market?
Well, I think the thing that could break this market is the things that we don't pay attention to, the black swans, if you will, the geopolitical risks, the paying attention to the consumer. The consumer hasn't been particularly strong. We've had some conflicting data coming from sentiment and confidence, which is concerning, especially for the lower end consumer. And we're seeing higher end consumers move to the lower retailers, right? So Walmart in particular has talked about how they're seeing more high-end consumers shopping in their stores. That's something to pay attention to. Inflation does hurt, consumers across the board. I know I don't love spending $6.50 to fill per gallon for my gas tank. Of course, I live in Chicago, so our gas prices are higher than most people's, but still, the point being is gas prices have gone up quite a bit. And those things affect how people spend their money. So while I see that there's clearly this trend in AI, I don't foresee that ending anytime soon. 12 to 18 months from now, I would be concerned if we don't see better monetization of AI by non-hyperscalers and non-direct companies related to AI, but more the users of and the people who we hope will create products with AI or improve efficiencies with AI and able to monetize that. But for the time being, I think the biggest concerns are the U.S. consumer and the conflicting data there, how inflation impacts the U.S. consumer, and then any potential geopolitical disruptions are certainly the things to pay attention to.
The curious thing, though, is that we've been getting retailers' earnings, and that would be the time to highlight these concerns about the consumer, but it's not really showing up. And instead, you've got the S&P 500 up for a 9th straight day, making new records every day. So now that the earnings season with retailers is winding down, what's going to be the catalyst to keep this rally advancing in the next couple of weeks before earnings kick up again?
I think any sort of progress we see with the Iran war, continued strong results from the hyperscalers. We're seeing it kind of trickle down, if you will, to some of the older legacy players. Hewlett Packard earnings, the stock's up 25% right now on very strong earnings. And we've seen that over the last couple of weeks. I think that continues. That is going to be the key driver, I believe, of stock prices as it stands today. And just not a lot rocking the boat, if you will, between now and when earnings season picks up again is what will keep stocks moving higher.
All right, Shana, thank you so much. Shana Sissel is founder and CEO at Banrion Capital Management, joining us to share her outlook on the markets. And a lot of the outlook on the markets will depend on how this SpaceX mammoth IPO proceeds. Pricing could take place next week, and then the stock could begin trading potentially the day after. Shana Orczyk is our chief